Well, this is a presentation that was triggered uh, by my curiosity. Basically, it started with a question of how often price cycles occur and what's their frequency between one or two price cycles or three or four. And I had a question in my mind. So mixed together, I did some research. But first, let me, tell you about me. I think it's important you know who I am. I was born in Palestine. It's a very small place in the world. And I'm a civil engineer by education. Um, I did my diploma engineer back in Germany. Then I came to the US, did my PhD, and started in academia, started doing teaching, and then got tired of it, went back to industry, working in consulting, project management, and, everything in the industry. Uh, and then I retired in 2015.
Nice.
And
How was that experience going to college in Germany?
Do you really want to know?
Okay. I'll take that as a milk.
Germany, I had two college degrees before I went to Germany. I had a BS degree and a master's degree from Holland. And all of my degrees, they would only accept him. Well, they did accept him as the diploma engineer, but then they wanted me to do exams to validate that, to be considered as a diploma engineer. And I said, do you guys want to, after I do the, couple of exams and do a thesis and get my, do I get the diploma engineer? They said, no, you only get qualification. I said, well, what would it take to get the actual diploma engineer then if I'm going to invest, time on it? They say you'd have to do all the exams of the diploma engineer.
Oh, goodness.
18 exams. At the time, now they changed. Now they have BS, MS. They didn't do that before. In Germany, at the time I was there, you only had diploma engineer and promotion, which is PhD, and that's it. That's the only two degrees they had. They have a four, they call it four diploma, which is like the first 2 years, they call it four diploma. But then I said, okay, in that case, if I'm going to invest the time, I'm going to do all the exams. I mean, I had confidence in myself, and
nice.
But it was really difficult.
Gotcha.
It was tough. But I went through it, then I started my PhD, and I ran out of money, so I got a scholarship from the US, and I came to the US and did my PhD actually at the University of Maine, and started working here in this country. Nice. So that's Germany, and it's when I was there as a student, and it's a good joke. I don't know if you guys know the joke of the stupid questions. The professor over there mentioned a joke about stupid questions. He said, there are no stupid questions, there are stupid answers. And he brought in an example. He said, professors, when they go from one country to another to visit, typically, they don't get paid, and they don't have much money, but they invite one another. So, a college and university in US would invite Germans. They come in, they get paid ticket and stuff to do a presentation, and they can see the country this way. It doesn't cost them much to have a vacation. So he said one German professor was invited to New York. He came to the US and he had 3 presentations to do. He went to the first one, he hired the taxi cab to be with him for the whole day because he had a certain time constraint. So he want to go from one day. So you stay with me, I'll pay you. So the taxi cab driver would sit in the back. Professor would go make his presentation perfectly. Then they go back and say, okay, we're going to the next one. He does the same thing on the next one. And then they go on to the third one. Now the driver is saying, you guys are easy. I mean, you that's all you do. You just go on there and you say a few sentences, you show a few slides, and you get paid for that. I mean, he said, yeah. He said, no, I mean, I could do that myself. I mean, I could do that for you on your third presentation. I can do that. I said, well, what if they ask you questions? He said, didn't you notice they always ask the same questions? He said, okay, well, let's try it. So the professor sits in the back. The driver gets on the podium and he makes perfect presentation. He memorized it. The people came out and asked questions. He knew how to answer. But one guy came out and asked a different question. And then the driver, of course, he doesn't know what to say. He just thought about it and said, this question is so stupid. Even my driver in the back can answer it.
Nice.
So that's the joke of the stupid question. So there are no stupid questions. There are stupid answers. That's what we do. Going back to the presentation, I have a family. I have 6 kids. Most of them are engineers, except for one of them is a teacher. The other 5 are engineers. I have a daughter-in-law who's an engineer too. And so we seem to be a family of engineers. About myself, I like outdoors, fishing, hunting, gardening, travel, things like that. Anything outdoor. I live out here in the country, in the middle of strawberry fields in Plant City, Florida. So that's all you see around me is strawberry fields.
Wow.
And I enjoy trading. I started with options back in 2014. I knew I was going to go on retirement, and I thought I would want to do something on my own, during that time. So I started learning options, and then, lost a ton of money. And now I'm kind of like stumbled into the apiary fund, and figured, okay, let's give this a try. And I've been with you guys for 3 years now. I'm trying to focus on Forex and trying to learn and trade and be with you guys. So that's what I'm doing now.
Nice. Well, glad to have you, sir.
Thanks. All right. So this presentation, at first, it was the idea of David that you can learn by teaching, and something I wanted to learn. I have a fear of buying or catching a falling knife. It just when the market is dropping, for some reason, I just don't feel like it will ever come back up. Why? I don't know. You have an echo?
It was for a sec.
I fixed it. You're good.
Yeah.
Oh, okay. So it came from a question, right? About the probability of those reversals, right? Or price cycles.
Yeah. Then Dave came at one time, he asked a question, how often does these price cycles happen? Like 2 price cycles, 3, how often do they repeat themselves? And I figured, maybe I can, count the cycles and see if we have more price cycles going downwards than upwards, maybe, how often they repeat themselves, and Does it make a difference if it's downwards or upwards? Does it make a difference if it's the 1 minute or 5 minute or the 1 hour? I figured, if I can write a little algo that will just chase the three bar reversals and find the pivot points and then count them and just classify them. This is one. This is a pullback after one or two or three cycles, and just tabulate it and see what comes up. So I did. I wrote a little routine that will basically scan and go through the three bar reversals, and it does consider a cycle when a new pivot is higher than the previous pivot by at least 1.5 or 1.6 of an ATR. So it's not like just any physically any little thing. It's just like and I use ATR as a unit because ATR is kind of like universal for the chart. Like you could run the same routine on the 1 minute chart, on the 5 minute chart, on the 1 hour chart, because the units are in ATR. You don't have to specify number of pips or so. If you were to put that in your measurements with pips, then one cycle in 5 minutes is different than a cycle in 1 minute chart. But when you put it in terms of ATR, then it's universal. You can run it on any chart you want.
Right.
You don't have to change anything in the software. But this is something I learned from the Germans, by the way.
Nice.
Yeah, we did that. We did a lot of things that are kind of like more universal. When you program it, you click a button. It doesn't matter what you do, it's gonna run.
Right. As, price moves the same on our 1 minute as it does on a 5 minute, right? Or 1 hour to the daily. So,
right.
No, this is excellent research. I'm excited.
Yeah, so I said, okay, for me, a three bar reversal when it closes below the previous low and it's in a 3 bar, I would consider that a pivot point, and then I would say, I will count how many pivot points occur before a pullback happens. A pullback is when the new pivot point is now lower than the previous one. Now I'm counting downwards until it reverses. Now I'm counting upwards and so on. And I counted up to 10. So, 1, 2, 3, 4, 5, 10 or more. So I didn't count 11. I mean, that wasn't. I only had a matrix of 10. And I figured I'll check the 1 minute chart, the 5, the 1 hour, and the daily, just for this. I mean, just for the exercise. So when you run that routine, what happens is it takes every pair. I did it on all the pairs. This is the 1 minute chart. Started with Aussie CAD, and it will print out when the program stops, when you specify from to the dates and so on, and do the back testing. I did for 1 year, the 1 minute for 1 year, from January 1st, 2022, until the date I did the thing. It was toward the end of December. And then it will print, it will spit out this data for me. It will spit out these two lines when I run on an Aussie, which is the number of up cycles, the down cycles, how often they occur. In this case, was 1729 and 1742 going downwards. And then when I run the same program again and use a different pair, it just adds that to the CSV file. Basically, by the end, when I run all the 26, I have one file. Then I upload it to XLS, and this is what you would see.
Wow.
Okay, then. I thought, okay, I got the data now. This is the 1 minute. I got the data. I got the numbers of cycles. What's the ratio between upwards and downwards? So
the first line would be a bullish cycle.
That's the bullish is 51.83 in one cycle and 48 in downwards. And the second one here is this one is 2 cycles, 3 cycles, and so on. And then I made an average at the end. And you see the average that for the 1 minute chart, it was for the settings that I made, for the time period I did, whatever I did for that exercise, most of the time, the downward cycles happen more often, and the 5%, in some cases even 10% here in the case of Euro USD.
Wow.
I didn't key in all of them here. This is just an example, but I have the XLS sheet. You see the sheet, the XLS sheet I have?
Oh, yeah.
Yeah, on the XLS sheet, and this is for the 1 minute, that's the data, and I got all of them. And then I started working on, kind of like this is the ratios I did. And let me move the pictures a little bit. And then I separated the up cycles from the down cycles. And and I did additional averages, which I'm gonna just talk about. And I have the same for the 5 minute chart, the 1 hour, and the daily. All that information is identical in the same format, with the original data being in that spreadsheet. So what I did here is I looked at them and I say, okay, they look like there is maybe a small bias toward the downside. And then that's another example for the 5 minute chart. These are the number of occurrences up and down. And then here, these are the ratios. And on the 5 minute chart, the ratios are a little bit, kind of like mixed, with maybe some smaller bias to the downsides.
I'm really impressive with that 10% on the euro dollar, right?
Right.
Yeah.
Yes. So then I figured, okay, let's chart that. So I took each pair and I made the ratio between the up cycle, the down cycle for the 1 minute chart. This is the 1 minute chart. And then I made this histogram. And you can see for the 1 minute chart, from the data I got, you can see that it's clearly, going down is the dominant, or it has more, if you average this is 52% compared to maybe 48%. So it's like 4% difference between the two. And it's consistent across all of the pairs.
Yeah.
Not just one pair. It's like consistent on all of them. So then I did the same thing for the 5 minute chart. Now you see the 5 minute chart, they're getting closer together. Okay. Yeah, there is still a little bit bias, like, 48 to 51. But that's the average. But when you go individual, you even have some that the upwards is higher than the down, the sum of the pairs. So interesting, something that I couldn't explain at all. You see this swing, it looks like a sine wave.
Yeah, it does.
I figure, what is this? It looked like a sine wave. Anyways, there is no explanation to this, but at least not that I know.
Right.
But it was interesting when I looked at it, saying, what kind of sine wave is this?
Right.
And then I did the 1 hour. And in the 1 hour, you can see they are almost 50%. So the 50.9, 49.9, they're getting really close for the 1 hour chart. And then you go to the daily chart, and it goes the other way around. Now,
right.
daily, there is very little data when you do in 1 year. So I went back 5 years.
Mm-hmm.
For the daily, I went 5 years back to get some substantial, at least reasonable amount of data, because the chart doesn't have that many pivots that you could count, and that will qualify, based on APR or all the conditions I put in there.
Mm.
So, but when you look at the daily, well, now the story is different. The upward seems to actually, be the dominant.
Right. Right.
So it could be that the guys, the little guys like us who scalp on the 1 and 5 minute, we are more fearful, and we seem to not we seem to be more bearish than bullish, or which is me. I know myself. I know that I really have a fear to buy when it's going down. It's kind of like in the back of my mind, and I say, I have to do something about that, and maybe only buy for the future and see how it works to just get the confidence in the system.
Well, I like how this data, kind of would give one that confidence, right? To understand that, hey, with certain pairs, I'm looking at a certain percentage when I am able to catch those reversals.
Right. So the data supports that, in some cases, it seems, maybe because the hourly and the daily traders are a little bit, that's where the money is, and they have a different practices than the little guys that are scalping and doing the 1 minute and the 5 minute chart.
Mr. Khalid.
Whatever it is, whatever the reason is, that's what the data is.
Mm-hmm.
Mr. Khalid.
Yes.
Excuse me. Can I ask you?
Yeah, there are no stupid questions.
I want to know what is the purpose, or what your intention to do with the data?
Why? It was a question in my mind that was triggered by David. Actually, David asked that question in one of the webinars, and he said it would be interesting to know, how often these things happen.
Mm-hmm.
And that's it. That was all. And then it triggered in my brain that well, I'm always afraid of buying when the market is falling, and I don't have the confidence that it will ever come back. It just, it's kind of like in the back of my mind. I don't know. It's crazy, but that's oftentimes how I feel like. So I feel more comfortable if it's going up. I feel more comfortable shorting the thing, but I don't feel the same confidence buying when it's falling down. Now that this is about me. So I figured, or maybe I can count them. Mm-hmm. So that's where it came about. Is if I can write a little routine to run through it and count them, then I can understand it better, or can at least answer the question David threw out. How often. Mm-hmm. So I figured, okay, well, let's find out if I can count them and find out how often. And so I started doing this, and when I finished, like a little bit before Christmas, I think, or during the vacation, I posted a challenge, and I posted my information there and my findings on that, and I posted the spreadsheet on the drive just for anyone to watch it if they wanted to see the data. And that was it. So that was it for me. And later, Jimmy was asking if I could do a presentation. And so I said, okay, I could go through that. And because it ties together to the initial question in my mind, would you catch a falling knife? It's just scary. So that's basically, I don't know if I answered your question.
So now then you're more confident in selling or buying, and seeing that on the 1 minute you find that there's a greater percentage.
If you let me go through to the following slides,
Okay.
I would answer that toward the end in the findings.
And also, just really quick, I think it's super interesting because when I primarily trade the euro dollar, I'm thinking, even on the daily chart, right? I'm thinking that the majority of because of the dollar being weaker, right, and inflation and interest rates going up, that I would be, I'd see a lot more of the down cycle, if you will. So I really like this. It's interesting because, you've got roughly about on the daily, and I know that you had to go back 5 years, but really surprised to see that the up cycles or those bullish cycles reached almost, roughly about 60% or a little bit higher on the euro dollar. So that, I like that outlook. And, kind of, for me, I think it's just more about, helps me to maybe even be more comfortable to, look at adjusting my bias or paying more attention to those price cycles, right? So.
Yeah. So this is, this is not probably, perfect data, because, I had to do a few assumptions, but,
Sure.
the program is there. It can be, you can set the parameters a little bit different, tweak it here and there, and you can make it more and more precise. It could be, depends on the interest. But for me, I was just interested to find out the answer to how often they happen. Yes.
I have a question.
Yes.
Khalid, I'm going to challenge you on there's no stupid questions, okay? Unfortunately, I was looking at my phone. I wasn't quite listening to your explanation of using the ATR. I was wondering if you could repeat that for me.
The ATR is, I'm using ATR 14, and I'm using, I believe 1.6 ATRs. Like if there is one pivot and another pivot, I consider a cycle if it went up or down at least a 1.6 ATR to be, otherwise it would, for me, it would be just a sideways. If it just, a small portion of an ATR, I would just consider that as a noise, and we're just going sideways. So
but the ATR is the average trading range?
Yes, average true range. ATR is the average size of the candle, basically. When ATR is 2 pips, then the candles are more or less average 2 pips. That's what it is. So I would like to see a jump up or down more than 1 ATR, a little bit more than 1 ATR.
Okay, so that's your minimum
right.
Volatility then.
Right.
In the candle. Okay. I do have another comment. I'm not surprised in the daily that you see more cycles up than down, even though the overall price action is going out. I've seen that over the last year in all of the majors, that a lot of times what you'll see is there's more up movement, but the candles are smaller. So you'll see that a lot, and you'll have more candles in a row that go somewhere, and then when the price moves, it moves in a very few candles down or the opposite direction. And so I find your research here and your very good, excellent. And I just wanted to let you know that I've seen that in other places, so I'm not surprised.
Okay, thanks, Joseph. So next, I wanted to do more, which is this is coming close to what I started. Part of what I did on the challenge posting. I only posted very small summary, and looking at the 1 minute chart, I figured, okay, let's see how often they occur. And so if I look at the here for the average of both for the average, this one is going up and down, which means both of them combined. The average of whether it's going up or down is just the frequency. How often the average is 1883, it turns out to be 38% of the time that it will pull back after one cycle. Then I said 2 cycles, it will occur 23% of the time, and 3 cycles 14, and it goes down, toward the end. So I looked at the going up, down for the 5 minute, and I looked for the up down for the hourly and the up down for the daily, and you see that they are very, very, very close in how often they happen. They are around the 40%, 40% here, and 23 to 20% on double cycles, and so on. And I figured, okay, what if I added them together? So, like, if I wanted to know what are my chances for it to pull back after 1 price cycle, what are my chances for it to pull back after 2 price cycles? What are my chances for it to pull back after 3 price cycles, and so on? So I said, okay, well, let's add them together. So that is basically the cumulative, which I call it cumulative, and this should be, I should have had one for every one of them. I may be missing.
For every pair?
No, for every time.
Time frame.
Yeah, okay, there is. This should be, this is the 1 minute, and that's the cumulative. Okay, so I figured 38% for 1. If you add the 1 and 2, so if you add the 38% and the 23%, you get 61%. And if you add the third one, you get 76% and 85 and so on. And then I did that for the 5 minute chart, is 38.7, 61.6, 76.04. Did that for the daily, 42, 63, 79. They're very close together. The numbers are very close. Now, what was surprisingly to me, that was the thing that I never expected, that they follow the Fibonacci levels. 38%, 62%, 77%.
Yeah.
These are Fibonacci numbers.
Yeah.
This is crazy. So that's why I figured, okay, let's plot that thing, and then you see this is the cumulative or the additive ratios, and you see the 1 cycle, the 2, the 3, and so on, and it's amazing. 38, 61, 76.
Right.
Okay, 5 minutes is 38.8, 61.7, 76.0.
Wow, that's cool.
And the hourly, and it's derived directly from the data that just came out of the counter. And this is the daily, even the daily with the very little amount of data, because the daily really didn't I still got, close to, it's more rough, not exact Fed number levels, but it's very close. It's surprisingly close.
So, just a second. This is the chances of it pulling back after these number of price cycles,
Correct.
whether up or down, or
Correct.
just which
Yeah,
of them?
this is both up and down.
Oh, both up and
They're
down.
not separated here. I did not do the separation.
Okay.
I did not do the separation. No.
So then, in your trading on the 1 minute, then on the 1 minute chart in your trading, then you're more confident then that after one price cycle, the chances of it pulling back is just about 38%.
Right. You have 62% chances that it will continue.
After the 1 to 2 cycles,
that
right?
it will not pull back. It will not pull back and reverse. It has to make a cycle. It has to pull back a little bit.
Right.
And I'm talking about the reversal.
So this 38%, what does it say? 38% that it will continue or it will pull back?
It will pull back. It will reverse.
And after two price cycles, it will 61% that it will pull back.
Have some type of pullback.
That will reverse. That you'll get a reversal.
But it doesn't. But the pullback. When you say pullback, the thing I don't understand is how far you consider a pullback?
It's a reversal basically. I'm talking about the reversal here. When I start counting down, when the pivot now the pivot is below the previous below the low of the previous pivot.
Right. Previous candlestick's low.
Yeah, it actually reverses when it reverses trend from upward to downward.
That is per candle.
No, I'm counting the pivots, which is the 3-bar reversals.
Right. So the cycle. Yeah.
3-bar reversals. Okay.
So when there is a pivot that goes, then a second pivot and a pivot and a pivot, and then all of a sudden it starts making lower lows and lower pivots. Now I start counting down. Now I'm counting down.
Yeah.
Those cycles until it reverses, and I start counting upward.
Makes sense.
I count in one way
So after one price cycle, there's a 38% that it will reverse.
That it could reverse, which means oftentimes this would be something like it's going sideways. It's just going up and down, up and down, and up and down like this.
Oh.
Okay. That will go down, and it will not create the next pivot will not be higher than the previous one by the parameter I set 1.6 ATR, 1.5 ATR. I had to come up with something. See, there is no.
As your
I had to come up with. I could rerun that with just 1.0 ATR or half an ATR, and then you get completely different numbers because you will get every itsy movement.
Okay.
You get thousands more movements. But I wanted to eliminate the noise and get the ones that are more meaningful. Okay. And for me, from my observation, I'd say meaningful if it moves higher than 1.5, between 1 or over 1.5 ATR, then it actually is a break and it's moving upward.
Oh, okay.
Or the other way. Otherwise, every little anomaly, it will be then counted as a cycle. I didn't want that. I wanted some more, substantial, something reasonable.
I thought you'd have used, say, 2 pips.
What's that?
I thought you'd have used 2 pips at this standard.
Well, for Euro USD, for the 1 minute chart, ATR is anywhere around 2.5, 2.3, the average ATR over 5,000 bars. But if you look at ATR on each and every location, if you ever use Prodigy, it lists your ATR at the current location. And if you look at it carefully, when the market is volatile, it can go to 5, 6 pips, but when it's not, then it could be just 0.7. The market is dead. There's no movement. So,
Okay.
and I did restrict the ATR to be at least 2 pips for it to count, because sometimes you get the dead markets and ATR could be just a half a pip or so. I wasn't going to count those as cycles. that doesn't, that's not real cycles. These are just, noise.
That's how I calculate mine. No,
So that was very surprising to me.
Yeah.
So that brings me
To a conclusion.
back to my observations. And what I found is that the more the market moves against you, the higher your chances for it to reverse.
And David said that all the time. So that is why you would start out light in your first price cycle, and as you go, you would get heavier as you increase in price cycles.
Yeah, and that's why, like, anytime I was looking at Dave or Sean trading, and the market is falling, and they are buying, and I say, oh, these guys are crazy. How can you buy when the market is falling? It's not going to come back up, but they have confidence in the system that I don't have. See, they have confidence in the system that even though it's terrible, even though it's falling, even though it doesn't show any sign of reversal, it will reverse. They have that confidence. They have the experience. They have the confidence, which I am trying to build to myself to get to a point where I say, yeah, I mean, it is a support line. It's been falling. It's been so many price cycles. There is a really good chance. And when it's 3-4 cycles, I say, okay, well, I'll probably have 60%. I may have 76%, chance that it will reverse. And it's worth, trading upwards now, not chase the market, which I often do because of fear of the reversal.
Mm-hmm.
So that's one thing. I noticed that the price cycles in smaller time frames are likely to be more down biased. Now, this is just an observation. There are no conclusions. You really need a whole lot of data and different to confirm, to be able to actually draw conclusions. It's just an observation, just something that we can talk about. The price cycles frequency are almost consistent across currency pairs. I mean, no matter which pair you use, you get very close results, which was, interesting. And the surprising fact is about, how precisely they are, close to the fib levels.
Mm-hmm.
Of this I never expected. I mean,
fib.
I could never expect that it will be these numbers.
What's a fib? It's fib.
The fib level, the Fibonacci level.
Fibonacci.
Yeah.
Fibonacci levels, like when you draw a fib level.
Yeah, I know what you're saying, but you spelled it wrong. Fib. It's FIB.
FIB, yeah.
I'm sorry. Okay. Okay. All right.
You have an English teacher there, man.
All right. Yeah, thanks for that. Yeah, it's so this should be correct now.
But that was super surprising to me too, right? Oh, it was just right on, right? The 38%, the 62.
Yeah.
Yeah, I was surprised when I looked at the numbers and I say, okay, wait a minute, how about the 5-minute chart? Well, how about the hourly chart? How about the daily chart?
This last part of your observation, you said that one price cycle repeats 38% of the time. Are you saying that you will have one price cycle more often, or the frequency of it is 38%, but 1 to 3 price cycle frequency is 77%? So most time you'll have 3 price cycles before a reverse. Is that what you mean by that?
No, what I'm saying is what the data is showing is that if you have 5,000 price cycles, 38% of them is just one price cycle and it reversed after one price cycle. The reversal for me is when I flip from counting upwards to start counting downwards. This I consider a reversal. Okay, and so if the higher highs, the higher lows stop, and now you get the lower highs. They define the downwards. If you have a higher lows, those define upward trend for me. That just was an assumption I had to make because you have to define how the program is going to count upward and downward. And I intended to count you have to count this way to figure out, when is the reversal happen to find out how many cycles are there before it reversed. Mm-hmm. So you had to come up with a definition. Okay, what is it? So I just followed the common practice. Okay, higher lows, that's an uptrend, and lower highs, that's a downtrend, and that was the assumption I made. That's how the program works.
That's the price cycle.
Yeah, but the price cycle is alongside the trend. If the trend is going up, then it counts how many cycles before that trend is broken. Once it breaks, then the trend is now different. Now I'm counting downwards.
Yeah, I would say that a prerequisite to understanding this is you need to understand what a price cycle is, and maybe we should have started with that on the first slide. But that's okay. I got a couple questions for you, Khalid, if you don't mind.
Sure.
So I understand that you took this journey based upon a conversation that we were having in a trade room, right? And that's like, hey, that's a great thought. It's a great concept. And then you took that and you expounded that and you went and did the research.
Right.
During your research, and this is kind of a statement and a question. Anybody that's going to present in these meetings, I want to answer these three fundamental questions. Anytime you present anything, you need to be always asking these three fundamental questions. And so I want to ask you these three fundamental questions, and they are, what was the reason why you decided to do this research? And I think you've answered that. How does this research help you? And what would you, and how could you help somebody else with this research? And how could you implement it into your trading? Do you know what I mean? And so those are really the last two questions that I'd love to know from you is how is this research to help you in your trading? And then how can you implement it, or how can you help others to take what you've learned and use that into their trading? Does that make sense, Khalid?
Yeah. So the first question we answered. The second one, I answered the second one as well, but we'll go over that. It should. I'm hoping, and I'm gonna have to do some more work on at least practice, because this is just theoretic up to this point. But it should emphasize the confidence in the system. It started, in my own experience that I am really fearful of buying or catching a falling knife. When the market is going down and it reaches support, I think it's still gonna come down again. It's just gonna pull back for a little bit, and I would be just ready. It's easy for me to short at the bottom just with a little pullback than to actually go long, which I should. Now, if I have the confidence that, we are 3 or 4 cycles down, we are at support, I have 62%, I have 76% for it to actually reverse. So I want to get that confidence in my trading. So I know when it reaches certain levels, with a certain amount of cycles, that what are my chances? So this is basically what I'm hoping to get out of it, is the confidence that traders like you and Sean have. Like when you buy at the bottom, when you buy when it's falling, I say, what the hell is he doing? Why is he doing that? I mean, the market is falling. It's just going to continue. It's just in the back of my mind. And it's wrong. It's just a perception that is incorrect. This data is showing that actually it's incorrect. It's, this is the frequency. This is how often it reverses. This is your chances for it to reverse. And it's been tested over a year, and you can test it over 5 years. Like on the daily, I tested for 5 years. And I could still test the minute and the 5 minute for 5 years. It only take, a few more minutes if I wanted to. But I just wanted to emphasize that and get
one of the words that I keep hearing over and over tonight is confidence. And to me, that would be, if you're sitting here watching this or you're watching a recording of this, that's the biggest takeaway that I would take from your work that I would love to implement, is the confidence and the knowledge that, throughout 2022, this happened X amount of times. So what gives me new information that it's not going to happen? Well, really nothing. We should rely that, on your findings until proven different. However, that being said, you also need to know outside market conditions. Like when we were trading this morning, right. I said, I would treat this as this, but I'm not going to, because there's a news event that's influencing the market right now. Right. Or, yes. Or are we in an uptrend, downtrend? What direction, what are we looking at? And if you don't mind, I don't want to steal, anything, but I am going to share my screen if that's all right with you. Sure. Because
can I answer the last question you had before? Because you had a third question.
Yeah, absolutely.
That question: how does that help, or how do I help other people? It's just simply by being a team member, by sharing my information, by posting, the data on for somebody to, go through and look. And, I could also trigger some thoughts in their mind, and maybe they can, do some more, get Crimin's feedback. It's basically just a teamwork and a group. That's all I can do. I'm not a financial advisor.
Sure.
I do not advise anybody to take this as any kind of signals or anything. And but basically just an information, so people maybe could, use this and learn from it, and maybe test it, or maybe observe it, when they trade, say, yeah, it seems to be doing this, and get the confidence I'm looking to get.
Yeah, I love this actually. And if you don't mind, I'm going to take some bits and pieces of this and share it in my presentation for the upcoming boot camp, which is price action boot camp, right? I mean, this is price cycle, price action. It's the definition of price action. And honestly, if you can identify price action and you can trade price cycles, you can trade any instrument that's out there. Right. But it just so happens that the instrument you chose to backtest on is the currency pairs. And you did a marvelous job. I can't stress that enough. I really am excited about the information.
Can I say something?
Yeah, go ahead, Joseph.
One of the things on that last question, how do you help other people? It just dawned on me, the use of the ATR and the measuring the price cycles that he's using. That's a current thing that you can do while you're trading. And it's an easy thing. We do things where we take, the lines and we transfer them, and then we say, well, this is a time and cycle stuff, where you just start going to pivot and use the average over, 1,000 bars or 500 bars, and you got how many price cycles it is right there, and it's on screen. And then that information that he's got, you can use that information to say, well, hey, we're getting there. Does that make sense?
Absolutely.
Yes. Yeah, absolutely. I didn't go into too much detail. I was just gonna, it's kind of like an initial thing I wanted to do, and I had a few questions in my brain I wanted to answer.
Yeah, no, I love it. So thank you, Khalid, for presenting. The only thing I'm going to just share really quick is that while you were talking, I was using that information that you were presenting to pull out 0.5% during this presentation, right? So I started trading while you were talking, and it's just case in point. Like here, this is the price cycle tool. If you guys aren't familiar with it, it's a simple middle mouse button wheels the hotkey. But I came into this right here, and I'm like, okay, I measured this price cycle 6 and 4 bars, right? So I'm like, okay, and there's another one. 6 and 8 bars, right? And there's another one, 4, 5, and 10 minutes. But I'm like, okay, so it moved up 6, moved down, 8. So I'm like 6 to 8 pips. And so it moves up 6, and then it moves up 2. So this is a double price cycle. So I'm like, okay, it moved up 2 price cycles. What is the likelihood that it's going to move down
6 and 2%.
At least 1 price cycle? And so I loaded up here, because I knew it was going to most likely going to run down a price cycle. But on the other side of that too, is that guess what? If it didn't run up, if it didn't run down, so it came up a price cycle, came up another one, consolidated, and then chose to go up another one. What's the likelihood of we're going to get another one coming back down here? It's even higher. Right? The probability is now higher that we're going to at least get it from here to here, at least 1 price cycle. And you'll hear me say this a lot, and Sean will say this a lot, that if I can just get 1 price cycle, I can fix a lot. I can do a lot. Now, so I started loading up right here for a price cycle down to here, right? And this is also correlated with that. That's your action point, right? Mm-hmm. And then again, it consolidated, and I'm like, okay, it's probably going to come down to here, another price cycle. And so I just was able to capitalize on this move here, and this move here, and pull out 0.5% just while you were talking, using the same thing that you were just talking about.
Yeah.
You know what I mean? And that's how you implement it, what you're talking about, right? And that's how you put it into action and practice. Yeah. Exactly. So I really, really appreciate what you put together, because I'm not the analytical guy. I'm the guy that says, well, I think it does this more often than not, but you're the guy that says, well, it does it exactly this much. And so I love that. I love having that concrete evidence, because I'm just more of an intuitive and methodical guy that's like, okay, I can see the patterns in the market, but I don't know how often that they materialize. So it gives me more confidence to hunt for price cycles, right?
Yeah.
So I agree. Yeah, really appreciate for me, it's like the data. Once I see that data, now I'm really paying more attention, right, to the price action, right, to those price and time cycles, which in turn gives me more confidence. And so, because I'm a guy just, I'm reading these candlesticks, I'm, going more off of the what I feel the high probability is. But yeah, having that data and just kind of sits in the back of my mind now that I know, where it helps me is to really pay a lot more attention to that price action. Right.
And the only thing I will say is that, and I did say this every day, that you still need to be cognizant of these areas of areas, right? So right here and right here, right? Because those are your ride the wave situations where it starts to ignore price cycles.
Sure.
Right. And so you companion the price cycles with the ride the wave that we teach every day. And I think that those are good techniques to have, right? So you jump in and out of those techniques. So any other questions that maybe before we wrap up? But Jimmy,
that was excellent work. I think that was excellent work, Khalid, because it to give me the confidence that it's going to turn at least 77% of the time.
Well, if it does and it helps you, I would be very happy, and I would only charge 10% of your.
Okay.
of your losses. I'm going to take 10% of your losses.
However, if you lose money in it, you are on your own.
I'm just kidding.
If you lose, it's not you. What if you win it too? If I win it too?
Yeah, if you lose because you didn't follow the instructions. Well, I'm glad you like it.
Yes, indeed.
Again, I really appreciate it. Great work, and we all appreciate it. And
Yeah.
so, let's see. I think we're good. Any questions?
I love that. I love that
answer?
comment. I love that comment from Hobble Wobble. I'm going to white knuckle 30% less of the time now.
Right.
Well, if you know what to expect, and if you know that in a certain level what your chances are, it could help you determine how much you're gonna trade, how many lots you're gonna use, or at that level, or and where it would go next, and what you should be prepared for, and how much you should be able to withstand if it goes against you. So it's just help. It knowledge. Knowledge is always good.
Mhm.
It helps you. It basically enriches your. It enriches your way of do better, more educated, judgment, and outside of the guessing or the fear or the whatever. So you have a little bit more confidence, I would say, more something say, yeah, this has been tested, and I know it will do this, or I know what my chances are. And in
Right.
trading, it's all about probability and chances. There's no exact science. Nobody knows the market. The market does not fit in a mathematical model. It does
It
not.
doesn't fit in any model.
It's
Yeah.
impossible.
It really is. It's a higher probability, right? And and I really like how this data. You mentioned something. Just really quick before we wrap up. Could help with your position sizing, right? If you have a good idea of, hey, I have a lower percentage chance that this is going to be a reversal. I might not be so heavy, right? Or vice versa. And so,
Yeah. Yes.
but no, again, very much appreciated for everybody. Thank you guys so much. I know that I took a lot away from this. Again, appreciate your time, Khalid, so much for putting everything together. So thanks to everybody. Really appreciate everybody attending and all the great comments. This community is amazing. Everybody really comes together. Let's keep it up and let's make 2023 a good one, right?
Okay.
Excellent.
Sure. Thank you. I'm happy.
Profitable.
Awesome. Thanks, Khalid. Thanks, Jimmy.
Thanks, sir. All right, y'all take care.